Good afternoon, everybody, and welcome to Shared Capital's 2022 Annual Member Meeting and Cooperative Forum. My name is Adam. I'm the Director of Member Relations, and as you all log on, we're just going to go over a couple of announcements and some orientation to make sure that we're all ready for a great meeting. At this point, I'm sure you're familiar with Zoom and video conferencing, but we just wanted to offer that if you need assistance, please contact me, or you can message me. My name is right in the chat. Or you can just put in the chat that you're having any issues, and we'll make sure you've got everything you need. Also, please name yourself. So in your screen, you can click on the ellipses, the 3 dots, and you can name yourself. And we also encourage you to introduce yourself in the chat. Say your name, if you have a co-op affiliation, why you're here, if you're a member of Shared Capital. It'd be great to see. So today's program is being run as a Zoom meeting. That means that we are asking you to remain muted as you come on because you are part of the conference. We want to make sure we can have as much participation as we want. But that does mean that you will be recorded if you speak. So please try to mute unless you're speaking. Also, your video feed can stay on. It'd be great if you want to leave your video on so we can see you. And we'll be spotlighting the presenters for attendees as they speak. So you shouldn't have to worry too much about that. If you like to see everyone, you can go to the top to the view icon, click on gallery view and see who's there. You can also just leave it on the default, which is the speaker view. So you should see me in the slideshow right now. You'll have an opportunity during this meeting to have questions so we can have answers too. And if you've got questions about anything happening in the meeting, just drop them right in the chat, and myself and others will be monitoring that just so we can make sure that we field your responses there. And we're going to try our best to get to all your questions. If we don't, we want to let you know that we do have breakout sessions happening at the end of this program for a good amount of time. And that's going to include breakout sessions for a financial deep dive, meeting new board members, investing. So please, again, drop your information and any questions you have in the chat. But we do want to let you know that today's program is being recorded. We're thrilled to be in the big time, and we'll have this up on our website and our YouTube channel. We also have other videos there about borrowers in our YouTube channel, so check that out. Okay, so to get things started, I'm going to hand this over to our Executive Director, Christina Jennings. Welcome, Christina.
Thanks, Adam. Yeah, great to see all of you. Christina Jennings, and I'm the Executive Director here at Shared Capital Cooperative. And also just to share with you that if you are looking for materials, you can go to our website, sharedcapital.coop, annual meeting, and you'll find our minutes from the past meetings and other materials. So feel free to go there if you'd like. And I would like to introduce our board president, Alex Betzenheimer. Alex, let me hand it to you.
Great. Hello, everyone. Thanks, Christina. Thanks, Adam. I'm Alex Betzenheimer. I'm the current board chair of Shared Capital, and I'm going to be leading us through the business portion of our annual meeting today before we get to the fun stuff. So with that, I will officially call this meeting to order. And our first technical order of business is to present proof of the notice of this meeting, which was sent by mail to all of our members on March 30th. With that taken care of, second order of business here is to thank our sponsors. Our premier sponsor for the annual meeting today is MCBA Inclusive. And we have a number of additional sponsors, which include Survey and Ballot Systems, National Cooperative Grocers, National Cooperative Bank, Capital Impact Partners, Wegner CPAs, International Center for Cooperative Management, Neighboring Food Co-op Association, Triangle Park Creative, and Mississippi Market Natural Foods Co-op. Thank you very much to all of our sponsors for helping make this meeting possible today. Next, I'm going to take a minute to introduce my fellow members of the board of directors here. It's a group of people that always makes me feel very humbled to be associated with. You can see all of our pretty faces on your screen here from left to right. At the top, we have Thomas Beckett, who is with Carolina Common Enterprise. That next guy is me. Then Terrence Courtney, the Federation of Southern Cooperatives. Dana Curtis, who has been our treasurer this past year and is with Key Figures. JQ Hanna with Food Co-op Initiative. Gail Patrice Lockhart Anthony, our board vice president with Black Label Consulting. Camille Kerr with Upside Down Consulting. Rapa McCaw with Nexus Community Partners. Julie Ristow with Sharing Our Roots. Holly Jo Sparks with Oriana Natural Foods and MSU Student Housing Cooperative, and Pamela Standing with the Minnesota Indigenous Business Alliance. I also have the pleasure to present the results of our recent board election. Our candidates are nominated by the members of Shared Capital each year. We have 10 seats that are elected by our co-op members and 1 seat that is nominated and elected by our individual members. We really do our best to run competitive elections every year so that our members have a real voice in our governance. And this year we had 6 candidates for the 3 open seats. Each of those seats has a full 3-year term. As always, thank you to everyone who ran and to all of our members who voted. The incoming directors for this year are Anna Boyer, who's nominated by the U.S. Federation of Worker Co-ops. Returning director, Julie Ristow, nominated by Lakewinds Food Co-op, and Charity Schmidt, nominated by Madison Worker Cooperatives. With that, I think
and I'll jump in. Thanks, Alex, because I want to take a minute to thank our outgoing directors. So Alex Betzenheimer has been on our board for 9 years and was on our loan committee for a number of years before that. So he's been a stalwart contributor to Shared Capital for quite a long time. We really appreciate that. And I know you're stepping off this year. I appreciate all of your work and leadership on the board. And also want to thank Dana Curtis, who's been the treasurer for the last 5 years, I believe. And Dana is also stepping down from the board, and appreciate all of her leadership and service as treasurer and a board member. Great, and then we will jump into, so many thanks to them, and excited to also have, they will be on into August. So appreciate their continued service during these next few months. So we're going to go through some 2021 highlights. So my pleasure to be here as the executive director of Shared Capital. I want to start by just refreshing all of you on what our strategic goals are. So our 2019 to 2022 strategic goals set by the board of directors were to, 1, grow our assets and equity in order to increase our self-sufficiency and our sustainability. 2, to deepen our impact of our work by advancing social, economic, racial equity and justice. And then also to increase awareness of our work, to make sure that folks know that we're there and what we're doing. Oops, let me, going ahead. And finally, to really strengthen the human and technical capital that we have in the organization in order to support our growth and increasing effectiveness as we continue to grow our work and our ability to serve our members. So those are our strategic goals. And in 2021, we hit a really important milestone, one that we've been working towards for a long time, which was to reach 20 million in assets for our fund. Why 20 million? 20 million has been an important benchmark for CDFIs for a long time, marking sort of a minimum sustainability level. We've obviously worked for a long time at growing to that level, but it really will allow us to have a more stable earned revenue source to our fund. And so really excited to finally hit that milestone of $20 million with a lot of growth, in particular over the last year. We also were financially profitable in 2021, and as you'll see, that's really important to building the fund and our ability to serve our members. We also had a clean audit. Our board of directors, our finance committee met with the auditor, which is Wegner CPAs, met with them in April, in March, on March 31st. And they shared that there was an unqualified audit opinion, a clean audit for again this year with no adjustments other than our taxes, which they run for us. So those were the only adjustments that made, thanks to our finance team, who we'll be talking to in a minute, for all of their hard work in ensuring a really smooth and a smooth financial performance and audit. Another big accomplishment for 2020, for 2021, was that we launched our national direct public offering. This was a big undertaking, one we've been eyeing for a number of years, and a combination of policy change and organizational readiness meant we felt that in 2021 we were ready to jump into the national direct public offering. And we'll be talking more about that in our cooperative forum, so I won't go into more details now. So let's see. Want to cover a few other highlights from our lending and investing activities. We lent 2.8 million in loans, and that is down from 2020. Though it was about the same number of loans made in 2020, the average loan size was down significantly for a variety of reasons, many of which were COVID related and economic conditions related. But ultimately, we actually approved over 6 million in loans. So the pipeline remains strong, but some projects were slowed down and or smaller than in prior years. But our loan committee remained active and our staff remained active, and so those 6 million approvals will lead to a number of to quite a few loans being closed in 2022. So we're expecting that number back up. We're really proud of the fact that 97% of the co-ops that we financed in 2021 were either owned by people of color, low-income communities, women, or LGBTQ individuals. And we're really proud that that so much of our funds are going to groups and folks who've been traditionally marginalized and excluded from access to capital. And our lending, the businesses we financed, the co-op businesses we financed, created 46 new jobs, but also sustained and maintained 165 jobs in their local communities. I also really want to focus on our racial equity and justice work and share some highlights from 2021, given that this is an important area of work for the organization. So at this stage, our board and staff have continued to work on building diversity. Our board is currently 45% people of color, and our staff 33% people of color. We have continued to review internal policies and practices to explore how, going forward, to explore how best to increase our ability to effectively serve communities of color, how to effectively, how to increase ownership of our cooperative and representation from communities of color that are building cooperatives. One important activity was that our board formed the Racial Justice Committee, and this committee will be focusing on how else the board and the organization as a whole can continue to build towards a real racial equity and justice model. So that committee was formed at the end of last year, and we'll look forward to reporting on its activities at the next annual meeting. We also had staff participating in a number of diversity and equity self-education and training programs for personal and team development. And staff participated in a number of convenings and meetings focused around racial equity and justice. We also, in 2021, rolled out our new equity investment product. This is something we had piloted and experimented with previously, but as we rolled it out in 2021, it is focused particularly on serving, on being able to invest in cooperatives that are owned by Black, Indigenous, and people of color. We rolled that out with our first investment in April of 2021, and our second investment is took place in 2022. So we also delivered, our staff delivered a number of presentations to support loan access in BIPOC communities. This included presentations with the Nexus Community Partners and the North Star Black Cooperative Fellowship, as well as Network for Conscious Communities, Cooperative Academy, and Prospera's Acceso presentations done in Spanish. In 2021, the results of some of that work show in some of the numbers, and so I want to share those. In 2021, 48% of our financing went to Black, Indigenous, and people of color-owned co-ops. In particular, Black and Latinx-owned co-ops in the case of the loans made in 2021. That's up slightly from 2020 when 42% went to BIPOC-owned co-ops. That in the last 2 years, then that totals 3.1 million invested into BIPOC co-ops, and 1.3 million of that going into early stage and startup co-ops owned by Black and Latinx communities. I want to just share two particular co-ops that we financed in 2021 so you get a flavor of some of our work. Here is the Pecan Milk Cooperative in Atlanta. We made our first equity investment into Pecan Milk. They've been working to build their plant-based milk co-op and for a number of years, and we made a $10,000 preferred stock investment into the co-op to support that continued growth and development. Pecan Milk Cooperative is Black and Black, Southern, and LGBTQ owned, and we're really proud to be able to support their work with that equity investment. We also supported Proof Bakery Co-op in LA, and they were a conversion selling from the founder to the employees, majority people of color owned. Now it was actually the seller was a person of color herself, and she wanted to make sure that the legacy of the bakery continued by putting it in the hands of the employees. So this created 22 employee-owned jobs in LA, and we're really excited to be working with them. And now I want to take a minute to share that we are very excited that as a result of our strong financial performance in 2021, we were able to pay a patronage dividend. And so as you'll recall, patronage dividends for shared capital are based on interest and dividends paid to shared capital by its members when they access financing. So whether that's through a loan or an equity investment, it is the basis of patronage is that interest or dividends paid. So in 2021, we actually paid back $41,000 to our members in the form of patronage dividends. That's equal to about a 5% rebate on the interest that each member paid. So over 100 co-ops got patronage dividends. Those were applied as of December 31st of 2021, and notifications are going out as that was finalized in April once our audited financials were complete. So folks will be getting those notices. So if you're a borrower, expect a notice telling you, and know that those that patronage dividend was issued in additional shares so that we can continue to build our base. And those are non-qualifying patronage dividends. If you care, the letter will tell you more. So if that doesn't mean anything to you, don't worry. We'll give you more information in the notice that's coming out soon. We also are really proud to be able to issue a dividend on preferred shares. We launched our preferred shares offering in 2009 initially as a way to really build our equity at a time when we needed additional equity to grow our fund. And we've only been able to issue dividends about 5 times between 2009 and 2020, but we issued a dividend in 2020. And again, here in 2021, we paid a 5% dividend to all preferred shareholders. So that is additional shares paid to our preferred shareholders. It was added to their accounts in April of 2022 and is based on their holdings in 2021. So we're really excited to be able to pay out to our members that patronage dividend and make sure we're paying for the access to capital from the preferred shareholders. And let me turn over for more detail about our financial performance to Andy Shively. And I just want to say Andy Shively is our controller, contract controller through Key Figures. And she and her team at Key Figures provide us just really with an outstanding service on financial management controlling. So Andy will share some more about our financial performance in 2021.
Thank you so much for that, Christina. And thank you to everyone in attendance. I'm really glad to be here and to be a part of Shared Capital's work. So let's go ahead and dive into the 2021 financial report. So here we have the income statement. And you can see that 2021 was a financially strong year for shared capital, ending with a net operating income that's before taxes or patronage allocation of $865,000. Now, the main driver of profitability was a significant increase in grant revenues. Though we had anticipated minimal growth in contributed revenues in 2021, they ultimately more than doubled compared to 2020. This was due particularly to an unanticipated but substantial award from the CDFI fund as part of the Rapid Response Program. Go to the next slide, please. You can see here the income growth over the last decade in terms of total revenues, with grant or contributed revenues in green and earned revenues in blue. So while the bulk of revenue growth in recent years has been due to grants, these grants ultimately provide capital for increased lending, thus increasing earned revenues over time and building toward that sustainability goal. So though grants had the biggest impact in 2021, we did see a 13.7% increase in revenues related to our core lending activities. Next slide, please. Going back to the income statement, in addition to the increased revenues, you'll notice a 60% increase in operating expenses compared to 2020. More than half of this increase is related to fully grant-funded programming, for which shared capital serves as the main fiscal agent, but which is executed in partnership with other cooperative development and community wealth building organizations. The rest of the increase in operating expenses, however, reflects shared capital's growth and the additional human resources needed to manage and continue to drive that growth. Next slide, please. Looking at the balance sheet, you will see a substantial increase in total assets, growing 28% over the prior year, ending the year at nearly 21 million. It means, as Christina mentioned earlier, that we've crossed that line and met our goal of becoming a $20 million organization. Now, cash does constitute the bulk of increased assets, up $5.6 million from the prior year to end the year at 8.4 million. Next slide, please. You can see here the trend over the last decade of shared capital's total assets, which are in orange, and the portion of those assets that are deployed in loan and investments in the cooperative economy, which is in blue. Though we dispersed nearly $3 million in new lending in 2021, the loan and investments portfolio remained flat year over year at 13.3 million deployed. This lack of growth in the portfolio is due to the fact that in addition to normally scheduled payments, we saw more than $2 million in early payoffs in 2022, thanks, we believe, in part to the relief funds, both grants and loans, that were available to many of shared capital's borrowers. However, as we move out of the extraordinary financial environment of 2020 and 2021 and return to a potentially more normalized lending situation, we are on a solid footing, holding substantial resources that are ready to be deployed to grow the cooperative economy nationwide. Next slide, please. Going back to the balance sheet, you can see that much of the cash influx was from increased investment notes payable. They were up more than 3 million from the prior year to 16.2 million, though grant revenues absolutely also contributed to the significant liquidity at year end. As was the case in 2020, we took another step toward rebuilding the cooperative's collective capital or retained earnings, ultimately contributing $335,000 to decreasing the retained losses after allocating some profits to members and preferred shareholders. While the net income allocated to collective capital this year did move the needle by 16.8%, you can still see from the negative retained earnings that remain that we do still have a ways to go in future years to get back to the positive in terms of our collective capital. So that's the 2021 year in review. And I think, speaking of future years, let's take a look at our budget and priorities for this year. So we do anticipate another profitable year in 2022, though not as profitable as 2021. While we project that loan revenues will remain steady, we are not planning for the windfall of grant revenues that we received in 2021. The vast majority of the $1.4 million in grants that you see budgeted for 2022 are already committed, with only about $180,000 remaining to raise in new funds. Having launched a new direct public offering, we do anticipate additional interest expense due to the anticipated increase in investment notes payable. And with the addition of 2 new staff positions in 2022 and the need to continue investing in outreach to borrowers in order to effectively deploy our assets, we have budgeted for a $163,000 increase in operating expenses. Now, beyond the financials, 2022 promises to be another exciting year for shared capital. And so I'll hand it back to Christina, who can share some more information about the year ahead.
Thanks, Andy. Really appreciate your comments and insights. Well, so 2022 priorities, as you saw the budget for 2022, and I'll just talk a little bit about what's in our priorities and work plan for 2022. We are, of course, working to continue and to maintain strong financial performance. As Andy mentioned, we added 2 new staff positions in 2022. 1 additional loan officer, bringing our total loan officers to just a little over to 3 full-time folks, and also added a portfolio analyst to really help increase the monitoring of our borrowers' performance and support reporting on our portfolio and our work. We are projecting to grow to over 22 million this year. Of course, we are rolling out the public launch of our direct public offering that we legally stepped into in late 2021. The public launch is rolling in 2022. So we are hoping to raise a total of 5 million in debt and equity through the DPO. Some of that may be used to retire some existing debt or equity that has been with us a long time, and some of it will be used, of course, to grow the fund. We are projecting lending about 4.5 million in new loans and investments in 2022. And then we have a number of exciting new collaborations that will help advance racial equity and justice that we are working with partners on in 2022. We'll be excited to share more as those get underway. So let me turn it back to Alex.
Great. For the single most exciting part of our agenda today, I can announce that we have no unfinished business and we have no new business. So having accomplished that item, we do have some time. We do have some time for Q&A. If folks have questions for Christina or Andy or myself, you can throw them in the chat. As Adam said at the beginning, he and some other folks will be monitoring those. While you're taking a moment to formulate questions, I just want to say, first of all, thanks to everyone who's been introducing themselves in the chat. In this virtual meeting format, I think it just adds a ton to be able to get a greater sense of who all is here. So if you haven't done that yet, please do so. It's really cool. And then a quick congratulations to Christina, who has been recently elected to the NCBA CLUSA board. There's just one more, I think, exciting way that shared capital is more tied into the national co-op scene. So if you do have questions, send them along. Adam, I don't know if we've received any yet.
Nothing yet.
All right.
Oh, we just got one. What do you think will be your greatest challenge in the coming year?
Yeah, it'd be great to hear Alex and Andy. Maybe I'll just kick it off by saying that I think one of the greatest challenges is the sort of unpredictable economic environment. So as we come out of the most intense period of the COVID pandemic over the last 2 years, a lot of dollars flowing. As Andy shared, we had, one of the great things was some cash flowing into some of our member businesses, and that's was fabulous. It created the unpredictable pay down of nearly $2 million in existing loans, which just creates it's hard to anticipate when those are coming ahead of time, but very important to the financial health of those co-ops. So we're pleased about that. But I think the biggest challenge is not knowing exactly where how current economic trends are going to impact our members, impact availability of funds. So I think that to me is so will we be able to get the dollars out the door? Are there going to be obstacles for members in borrowing the funds they need to grow or start? So I don't know, Andy or Alex, if you want to add anything.
I guess just real quick, we're kind of due for a new round of strategic planning. We do it, I think generally on about a 3-year cycle, and sort of time to renew that. And that's always a really big project to take on.
I'll just add one more thing, which is somewhat an echo of what Christina just said. I feel like the biggest challenge for shared capital at this point is getting loan dollars out the door, deploying those assets, and building toward that self-sustainability goal. The grant revenues have been fantastic, and there's a lot of money in this work at the moment. But I think we've crossed that $20 million mark, and now it's about getting to self-sustainability. And I think shared capital has the resources for that, because it takes not only borrower outreach, but also support to borrowers to get loan ready. And I think that shared capital is in a good position to move that needle forward.
Any other questions from folks?
Seeing a few come through. Adam, are you gonna?
Yeah, we do have a couple. So one is, I hear people all the time looking to invest in co-op development. Are there any discussions about creating opportunities for individuals to invest?
Well, you've come to the right place. Now, we are going to be talking about that so we are really excited that our direct public offering, national direct public offering that we are just launching, allows individuals as well as co-ops and others to invest much more easily into shared capital. So I'll be talking about some of the ways that works, both the why and the how. And so we're thrilled to be able to have brought, we've taken a number of steps that we think make it much more accessible, bringing the minimum investment down to $500. Realize that's still not everyone may be in a position to do that, but we think it makes it much more accessible than our previous $1,000 minimum, which is much more accessible than many opportunities out there. So we'll talk more about that, exactly how folks can invest. The other thing is that the direct public offering really allows us to finally talk about this. So one of the, we were very hamstrung by the old system, which was called a private placement offering, and really prevented us from doing any marketing outreach. We couldn't even have information on our website. So for us, the huge opening here is to actually be able to say, hey, here's a place you can invest. Here's a way you can invest, and your money will go directly to supporting co-ops, whether that's startups, expansions, or sustaining co-ops that are already out there. That's going to be your dollar. That's where your dollars go. So excited to tell you more about that in a few minutes.
Christina, we do have a quick follow-up on that. Is that only for the US?
We have some ability to take investors from outside of the US. So I may need to check some of my specifics, but excuse me. But I know that we can accept some investments from outside of the US, and we can get more information. So if folks want to, if you have specific opportunities you'd like to explore, you can feel free to email invest@sharedcapital.coop, invest@sharedcapital.coop, and we can make sure we can clarify any specifics for you.
Alex, is it possible to speak to an earlier question? Nonprofit organizations often motivate and mobilize their members to get involved politically. Is there any thought about revving up shared capital co-op members in this pivotal year?
My answer to that is going to be mostly to pass it on to Christina and maybe Adam. But I will say that one of the great aspects of adding this additional staff capacity in the last year plus is that I think we have a lot more energy and just kind of time to do member engagement. So I know that that's really high on our list of things that we want to do more of. And then Christina or Adam, if you want to take it further from there.
Yeah, I mean, thanks Patrice and thanks Alex. Yeah, I think that it is a really important year, and I think we have one of our challenges is that so much of our money really is focused on coming from our lending activities only, right? So there are some limits, and then as a CDFI, there are some limits on the kind of political work that we do. That said, mobilizing our members to get out the vote and to make sure that we're supporting the protection of voting rights are really important priorities for all of us, and including shared capital. And so I think given our small staff size, I think we really have appreciated being able to partner with NCBA CLUSA with and other organizations, the work that the Federation of Southern Cooperatives has done, and National Co-op Bank, among others. The U.S. Federation of Worker Co-ops, I should add. There are a lot of groups doing really great policy and voting rights and election work, and I think we want to plug into that, and can also certainly use sort of share information out to our members in order to help mobilize action. So I think we would love suggestions about ways that members would like us to engage in that also. And Adam, do you want to add anything else?
No, but I did want to say we got one question about, is there share capital merch to purchase? And I'm going to put an email in there for you to contact us, and we have some mugs and glasses we'd love to ship out. We do have another question, and we have a couple more. So do you want to try to do one or two more before we move on to the next?
Yeah, I think we're okay on time if you want to take a couple more.
Great. So one is about the loan portfolio as a whole. Does the performance of the portfolio indicate any concerns or repayment capacity of our borrowers looking forward into this unpredictable environment?
Yeah, I mean, one of the things that we did over the last couple of years, or last several years, is to really look deeply into our borrowers, our member borrowers' financial condition. And I think there are, I think overall we were really just impressed by how how well member borrowers really navigated the COVID environment and the economic challenges of the past 2 years. At the same time, a number of certain types of industries and certain particularly earlier stage businesses were impacted. And so I think we're monitoring that closely. I think we have continued, as many longstanding members will know, I think we've continued to have some challenges from food co-op startup, particular food co-op performance. And some of those challenges continue in 2022. And we also have seen particularly some service businesses, food and others really impacted over the last 2 years. What we have done, I mean, I think one of our great strengths is the ability to just be patient on payments and allow our co-op members to build turnaround strategies, support them in building turnaround strategies, bringing them resources to access turnaround. And so I think that we have continued to do that. One of the things we also do is work to make sure we're protecting all of our members and investors financially. And so we actually are holding quite substantial financial loan loss reserves on our financials right now. I mean, nearly $1 million at the end of 2021. That is about 900-some thousand is really intended to protect against potential future losses. So if those co-ops can really turn the corner and improve their performance, then we can reduce those loan loss reserves, and those will be additional dollars we can use for lending. If on the other hand, some of them are unable to do that, and ultimately, despite all of our collective work to support their success, they close their doors and are unable to repay, we're able to mitigate those losses to share capital and protect members and investors from losing the money that they've put into. So that's what we're doing. I think that 2021 will be interesting to see how performance goes, but I think the good news is that we are really effectively prepared for any potential losses that could come, and again, working really hard to make sure that those that co-ops can survive and really succeed and thrive.
Can I add really quick to that too, that, if you looked at our portfolio a decade ago, it would have been much more heavily concentrated in food co-ops and housing co-ops, and largely in the upper Midwest. And over the last decade, we've diversified the portfolio considerably, I think, in terms of co-op sectors, industries, and geography. So I think that there's less concentration of risk in the portfolio now than at any time I've seen in the past, and therefore it really comes down to the financial health of the individual co-ops rather than potential, cluster issues.
Yeah, it's a really important point. The diversification of the portfolio has been a really intentional piece that the board and staff have been working on for the last 5 or 6 years, and growth has been critical to that, because we want to continue to support food co-ops and housing and are absolutely committed to doing that, but we need to just make sure that our portfolio, that sector, no one sector, a turn in one sector is really going to have a dramatic impact on our financial performance. I mean, I want to say, I think that we have taken some intentional risks over the years, and I think we're really proud to do that, because that's part of this work. And so it's about balancing, taking some really intentional risks to support, whether it's a new co-op starting that we see enormous potential in, or a co-op that has had that is experiencing some challenges and needs some additional dollars to be able to turn around. Or it's a co-op that sees a great opportunity to expand, but there's uncertainty in that. So I think that risk has been important for us to be willing to take, and we just need to have, as we grow, we're in a better financial position to continue to manage that risk. I think it's not about eliminating risk, but about being smart about what projects we're taking on and what we can do. Anyone, Adam,
We do have a number of other questions. I wonder if we can do one more.
Yeah.
We'll try to save time at the end. And I see a couple of questions here. I see you, KZ. I see you, Hendricks. We'll try to get to some of those questions perhaps in the breakout session about investing or in the financial deep dive. But we do have another one that is about, is there a perspective on where cooperatives are going right now and what we're trying to, how share capital is meeting need, and is there a broader moment for cooperatives and strategy?
That's a great question, and there are, I'm sure, many people on this call who know more than I do about to answer that question. But I'll take my stab at it. I think one of the things we have seen really enormous growth in transitions of conventional businesses to cooperative ownership, and that we expect that to continue. We've made it past, or we saw sort of an initial wave of co-ops that were where the owners really had a values alignment with co-ops, and it sort of made an enormous amount of sense for them to sell to co-ops. And now we're starting to see more businesses selling to co-ops selling to their employees to become co-ops for a variety of reasons. We expect that trend to continue. So I think we financed 7 cooperative conversions in 2021, and we expect that to. But we also saw a lot of startup activity. Sometimes these were groups that have been part of other businesses, conventional businesses that wanted to form a cooperative to continue their work. In other cases, they were groups that were, lifting up a new idea. And I think that has been, we know that also to really advance the work around racial equity and justice, that we need to be supporting those startup and early stage cooperatives in order to make sure that new Black, Indigenous, Latinx, and other people of color owned cooperatives can get started. So that is a trend that we've seen out there, and that where so much growth in the cooperative sector, particularly worker co-ops, is coming in communities of color. So those are a couple of trends. I think, I think those are some of the key trends that we've seen. But I think I think we all have to say this is an exciting moment where communities are really seeing the power of cooperatives, where investors are seeing the power of cooperatives more and more. Even funders are. I laughed that when I came into this job, I reached out to a number of investors and funders I'd worked with in past jobs and said, hey, this is a great thing that you should be thinking about, which is co-ops. And I have to admit, I didn't get a lot of traction. Now I think everyone's doing it. And I think that's exciting. We want to make sure we can capture that interest into supporting co-ops and sustain it, even if it goes out of fashion for some folks over the next couple of years. So it's about, we all need to make sure that this is here for the long haul. Any other questions you want to take right now, Adam? Or I will just add that we preview that at the end of where we're going to share some information about our direct public offering next. And then we're going to go into 3 breakout sessions. And so if you have questions, we will have one session that is a financial deep dive. You want to get into some of the nitty gritty of the financial information that was shared or wasn't shared, please go to that. And Andy and our team will be there to answer whatever questions you have. There will also be a chance to meet with our board members and a number of board members, and including some of our newly elected board of directors will be in that breakout session. And then we'll have a session on going even deeper on the direct public offering. And so if that's where you want more information, come to that one. So we will open those up after we talk some more about direct public offering. So hopefully you'll stick around and do those. No high pressure participation, just jump into one of those and check things out at the end. So encourage you to stay. Anything else we need to cover from Q&A, Adam?
We'll try to save some time at the end. I think we will get to a couple of those in the breakout sessions as well. Great.
Thanks, Adam. And thanks, Alex and Andy, again, for sharing information. And we are going to transition now into I want to take a moment, though, before I do. This is why we have the pictures, right? We have the slides. First, I really want to thank Adam Trott for all of his work on the logistics here today, but in leading up to today. Adam really helps make this event happen. And so I really want to take a moment to thank Adam for all of his work and creativity in doing that. And also want to appreciate NCBA CLUSA's team for their support here. But I want to introduce staff for a moment. Here's our team. As noted, we did add 2 additional positions, so we're now up to 9 staff, plus our contract controller and Andy and her team. And so Samantha Bailey is our lending team manager and loan officer. Mark Downey is our director of finance, director of operations and finance, and Mark Fick, our senior loan officer. Ashley Long joined in February as our loan and investment associate. That's filling an open position. We're thrilled to have Ashley come on board. Mike Seo joined in our new position of portfolio analyst, and Mike is based out of Seattle, and we're really pleased to have Mike join our team. Of course, Adam Trott as our director of member relations. Allison Wagstrom joined as our 3rd loan officer in March. And we're thrilled to have her bringing her lending experience and knowledge. She's learning co-ops, but is very excited about being able to work with co-ops, and we're thrilled to have her on our team as well. And of course, Rhonda Weidling, who's been with us for 11 years as our operations manager, and appreciate all of her years of service with us. So that's our team. If you see us out and about, or you want to reach out to anyone, that's who's who. And now we'll move into our we thought we would take this year's annual cooperative forum to really focus on our direct public offering and be able to share with you this new opportunity, because as members and as and supporters and allies, we want to make sure you're aware of it and can help us also promote it. But also be aware of exactly what we're doing and why. So I'm just take a little bit of time. We'll take about 10 to 15 minutes to cover this, and then we will go into those breakouts. So I first want to share that we've launched this as the Cooperative Economy Campaign. So this is a new campaign to really raise additional dollars into shared capital in order to build the future of a more cooperative economy. So there are a couple of things about this. We want to make sure that we're able to grow the fund, grow the pool of capital that we have over the long haul to support startups, co-ops that need support to sustain their activity and to help grow co-ops. And we're really looking to our members, our partners, our allies, and members of members and others in the community who want to see a cooperative future, and want to make this much more accessible than it has been in the past. So member cooperatives and some individuals have been invested for a long time in shared capital's work, and this will be a real chance to expand that. So I want to just talk a little bit about why shared capital, why invest in shared capital? What is our pitch to folks out there about why this is a good opportunity? And hopefully many of you who are on this call already have your own answers to this question. But I want to take a few minutes to talk about what I think are some of the key opportunities created by the growth of shared capital. So we are still the only loan fund in CDFI that is owned by the cooperative sector. So we are the only group that is really responding to the cooperative sector itself and owned, governed by our member cooperatives. We now have almost 300 cooperative members in over 35 states, and that number continues to grow. Why do co-ops join shared capital? I mean, they're really joining. Sometimes they're joining to get a loan. I mean, that's true. Sometimes they just need a loan, and they know they have to join in order to borrow from our fund. But an awful lot of members have come to us over the years because they want to be part of this network. They want to be part of a democratically owned fund that is ensuring that capital is available to co-ops. I mean, it really goes back to our founding. I like to think that still remains very true today, that when 43 years ago, a group of co-ops came together in the Twin Cities and said, you know, we've tried borrowing from banks. We can't consistently get the loans we need. We've tried looking at other sources. We need our own reliable source. And they created a mutual aid revolving loan fund in what was then North Country Cooperative Development Fund as a way to ensure that co-ops, small and mid-sized co-ops, could have long-term access to capital. So that continues to this day. Groups are joining, co-ops are joining in order to access, but also to support the creation and growth of other co-ops, because that's where they want their capital to go. I know everything from a new startup co-op that invests $1,000 because they have it in their savings and want to put it to good use until they need it, or larger co-ops that are putting $1 million or more in to make sure that their dollars are being used to really support their to support Principle 6 of cooperation among cooperatives, to support this cooperative economy, and to support other co-ops. So we really think that the democratic ownership structure matters. And I guess I have to say that one of the reasons I want to emphasize this is because I've heard a lot of talk over the last couple of years about democratic investing and democratic funds. And I think that sometimes that they're not as democratic as maybe we want to reflect on. Say that there are groups that are appointed, where the board of directors is appointed by an organization, or groups where it's a group of investors making democratic decisions among the pool of investors, but it's the investors making those decisions about where to invest, not the borrowers, the co-ops themselves owning the fund. And so we want to really, just highlight how important it is to maintain that democratic ownership. We also know that as a national fund, and 10 years ago, a little over 10 years ago, we moved to being national from being a regional fund. And it is more difficult to manage and engage members at a national level. The trade-off was there's a lot of opportunity to manage capital at a national level, a lot of efficiency, if you will, to having capital at this scale, to be able to get to a size where we can really offer more cost-effective loans, reduce the interest rates to our members, offer more robust services and more products. But the trade-off is real. Having to engage members across so many states makes it a little more challenging. And we are in 2022 and 2023, really looking for ways to more effectively engage with members to make sure that we're hearing exactly what's needed. One way is through our board of directors being nominated and elected by our members, but we know there also have to be multiple other mechanisms. And so we'll be looking at how else can we better engage our members and other cooperatives to make sure we're hearing about what the opportunities are, what the needs are. And that we think is central to democratic cooperative ownership. I have to say, I share that when I came to Shared Capital in 2008, I had never worked for a cooperative. I had been around cooperatives, I've been members of food co-ops, I watched some really great work of cooperatives in the US and in Central and Latin America. And I was excited about what cooperatives could do. But I didn't really get why it made a difference that Shared Capital was a cooperative until I had been on staff for a few months. And at the time, it was 2008, and the economy was facing enormous challenges. And we were at this organization too, having made some really important but challenging investments into startup housing cooperatives to really try to address affordability issues that still remain with us today, those affordability issues. But we took some great but challenging steps to try and address them. And not all of those bets paid off. And so we took a loss on 2 co-ops over during the Great Recession, and we were facing some economic challenges. And I have to say that in going to my first member meeting in 2009 and hearing directly from our members that our members were absolutely unequivocally committed to us continuing this work. They knew that they're needed because it was their work, because our members had invested over the years in making shared capital effective, and they needed, and they weren't backing down on that. I have to say, having come from working in nonprofit loan funds, I don't think we would be around today if we had been a nonprofit, because I think if our stakeholders had been our funders, I think our funders might have cut bait in 2008 and 2009 and walked away. There was a lot going on, and people were trying to best guess where to place their financial bets. And even our very committed investor base of non-members started to get antsy about what could be down the road. But our members were very clear, and I heard that loud and clear. And I realized over my first year here at Shared Capital just why it made a difference that we are answering to co-ops, that we are answering to our members about what kind of risk to take, about what kind of opportunities to build, about whether to even continue operations. And I won't forget that. Has been an ongoing learning experience, but particularly powerful in that first year of mine here. So I wanted to just share with you then that we think that we have this great opportunity to really build this fund for the next 40 years by creating a larger pool of capital that can better meet the growth of the cooperative sector. And to do that, we are launching the direct public offering. So what does that mean? For us, the direct public offering really provides the way to speak to more people more openly and more clearly, and open up the opportunity to more people. Our co-ops, all co-ops, co-op members, the general public who is aligned on our principles, our partners. And so we went through the process. It was a very involved process last year. And I want to just thank Cutting Edge Capital and Cutting Edge Counsel for their work. They were our legal advisors and just did an enormous amount of work to make that process as smooth as possible. And they did. In fact, it went so smoothly that we had been told by everyone that once we submitted all our paperwork to the Securities and Exchange Commission, and we plan to do that in September of last year, that once we did that, that we would have a minimum of 90 days before we would hear anything. Instead, within 5 days, the Securities and Exchange Commission came back to us and said, yep, looks good to go, you're on. Well, the problem with that is we're a small team, and we had planned on having 90 days minimum to build out our marketing campaign and all that. So we said, hey, can you hold for just a minute? We still have some work to do. And fortunately, they were kind enough to do that. So that was a surprisingly positive experience, I suppose. I think the image we all have is of an adversarial relationship with the Securities and Exchange Commission, perhaps for many. But they really worked. They were very easy to work with in this case. And so we launched our direct public offering. It's a Regulation A public offering for anyone who cares if you're deep in the weeds on those things. But so the really exciting thing is that this opens up our investments to all non-accredited and accredited investors. Previously, we had a cap on the number of non-accredited investors we could take. And we also really, like as I said, we couldn't market this. So now we're able to really get the word out much more effectively. We also lowered the minimum investment to $500, as I said, and that is really intended to, again, we need to process all those investments, and so we concluded that that was as low as we could go at this time, but really trying to open it up much more. So we also have one important step was opening this up to go through a portal, so an online portal, and we are using sbx.us.com to offer our investments. So the exciting thing is you can now go. If you go, I'm going to see if this works, if I can share this. We'll see, if you go to our page, which is sharedcapital.coop/invest, You'll end up here, and if you just click on invest in shared capital, you'll go straight to a portal where you can choose the kind of investment you want, read more about it, and sign in, create an account, and make an investment directly. So we think that's just going to make it so much easier. We were kind of living in the old way of you had to fill out paperwork and we had to send it back and forth, and now we can make it a lot easier. We can still do the manual paperwork for anyone who needs it, but I'm happy to open up this option. So what are the options for investing? And we are $500 minimum to invest in either preferred shares, and this is the preferred shares that we created in 2009. And we really want to grow our pool of preferred shares so that we can because frankly, the preferred shares allow us to leverage more dollars from other sources. And so investors coming in, this is the most powerful place for us. This is the most powerful place to invest, is in the preferred shares. We ask people to have a planned target hold of their preferred shares for at least 5 years. So this isn't a quick investment turnaround, because you need to ask the board of directors to redeem your preferred shares when you're ready to take your funds. And we will do so, but we want to make sure that we can hold those funds for a period of time to be able to really use them in loans to our members. We are targeting a 5% annual dividend. This is a dividend that will be reviewed annually by our board of directors. The target is 5%, but based on our financial performance, they can approve 0 or less. They can also approve more, but only up to 8% is the maximum under statute as a cooperative. But our target is 5%, 5% return for a 5-year investment. We think it's a pretty competitive option out there, but we also think it's really works for us because it gives us the dollars we need in a way that is really allows us a lot of flexibility. We also have another option, which is our subordinated investment notes. And there are 3 options, either a 3, 5, or 10-year note. And those offer different returns from 1 to 4%. So and what's the difference? The main difference is that for our notes, you get a fixed term. You know that you'll get your money back at either the 3, 5, or 10 years, whichever you choose. And you know what rate you'll get. You'll get a 1, 3, or 1, 3, or 4% return, depending on which note you choose. So you know exactly what you'll get and when you get your money back. With the preferred shares, there's a little bit more flexibility, but that does earn you a little bit higher return. So again, feel free to go to our website. There's information there on the site about investing. Share it with folks. If you're not in a position to invest, that's fine. But if you know folks who you think might be interested, just know about it. If your co-op is interested in investing, love to talk to you. Love to have you take a look there. Reach out to us at invest@sharedcapital.coop if you want more information. So we will be reaching out to members and partners and allies with more information over the course of the year. This is a 3-year campaign, and so between now and 2020 and 2024, we will be working to really grow the fund to a level that will ensure the long-term support for co-ops. And let's see. That is all I have right now. Does anyone have any kind of burning questions, Adam, or should we move? I guess we should move into our breakouts, looking at the time here.
Yeah, I think now's a perfect time to transition to those. And I will be sending a couple of questions to the people who are in those breakouts. But there's only a couple that we didn't get to. So
awesome. Thanks, Adam.
Mm-hmm. So yes, you will be able to choose your breakout room, and we will have the people that are now heading up those breakouts go into those rooms. We won't be joining together after these breakouts. So thank you everyone for coming. We're so happy you could join us today. And we're really excited about moving forward together and launching this cooperative economy campaign. Thank you so much.